Joining me to break down what we need to know during this busy earnings season and ahead of a Fed decision next week is Jeff Palma, SVP and head of multi-asset solutions at NYSE listed Cohen & Steers. Jeff, welcome.
Good morning, Kristen.
Great to have you here. And what should our viewers know about stocks at these levels?
So, as you mentioned already, earnings season now, I think, is the short-term thing that everybody's focusing on. I think a good tailwind for the market right now is that expectations fell a lot. Starting in the early part of this year, but especially after April 2nd. I think that makes the starting point on earnings expectations a little bit easier. But the challenge is that valuations are at pretty high levels, and there's still an awful lot of uncertainty to get through over the balance of the year.
So what are you advising clients on how to navigate this current environment?
Yeah, so one thing is to actually maybe not get too caught up in the short-term momentum story, but to really think about a broader story of diversification. And actually, year to date, certain markets have outperformed the U.S. Global markets have outperformed the U.S. Real assets, which is what we focus on at Cohen & Steers, have outperformed broad cap-weighted equities. And we think that's a durable story that will benefit clients going forward.
How does the economy look to you? The jobs market seemingly holding up, inflation coming down, but still above the Fed's 2% target. We know, of course, both of those factors do decide how the Fed moves forward on interest rates.
Yeah, and that's, I think, the conundrum that the Fed finds itself in today. Expectations for growth are probably slowing. We still think growth is going to slow in the second half of the year. Everybody's worst concerns about a real hard landing seem to have abated for the time period. But then you have this sticky inflation story, and we think that's going to be around for a while. We don't think we're going to get to 2%. And in fact, with the tariff impacts coming through, we're probably likely at a point now where inflation is already bottoming.
Interesting. So how does the Fed respond to that then next week when it delivers its next decision?
I think next week might be the easy one, do nothing. And that's very much the expectation, is that the Fed does nothing. I think it gets harder as the year goes on. If growth continues to slow but inflation stays sticky, can the Fed cut rates? The market is clearly suggesting that the Fed will cut rates one or two more times this year, and then, I think importantly, into 2026. We think that story on rate cuts is a tough call, right? If inflation stays sort of stuck around 3, if growth holds up, Fed may not need to cut rates this year.
Interesting. So tariffs, of course, another storyline driving market action. We see the market successfully with a V-shaped recovery after that initial volatility in early April, but another deadline looming of August 1st. What does that mean for equities and for volatility?
Look, it seems so far the market's not that concerned with any of these deadlines, and it seems rightfully so. There's no real hard cut reason why it has to matter at any given time. I think for the economy and for the market outlook in general, the question is, does this uncertainty start to translate into weaker hiring, layoffs, weaker capex at the same time that inflation is stickier? That's where I think markets become more concerned, as opposed to an August 1 deadline by itself.
What have we learned from corporate America so far, and what do we need to learn from them during this reporting season, knowing that we are in the early innings in regards to how they're navigating trade?
Yeah, I think it's pretty clear there's a lot of uncertainty. When we look at discussions of tariffs and earnings announcements, they're at all-time highs. Clearly, people are concerned about it. It's true in those consumer confidence numbers you mentioned as well. Again, I think we can get through this earnings season, pretty well. There was a big front loading of inventories last quarter that allows there not to be huge pricing pressure. But I think it's that uncertainty going forward. Can businesses continue to be as comfortable and spend as easily as they have in recent years?
Mm-hmm. And in terms of where we finished the year on the S&P 500, are you bullish?
I would say, we're sort of neutral at this point. I don't see there's any big reason why the market has to correct, aside from this valuation problem. If we're at a situation where growth falters, I think there's risk to the market. That's why we continue to push this story of diversification into things like real assets, which should do a bit better if inflation is stickier.
Where should people be looking for when it comes to real assets and places where they could find some serious return?
Yeah, so for us, we define real assets. The main categories is real estate, infrastructure, natural resource equities, and commodities. Infrastructure is our preferred market within our multi-asset strategies at the moment. They bring some defensive qualities to them, good diversification, exposure to certain energy markets, which can be quite good. And we like natural resource equities as well.
Interesting. So in terms of how those real assets are set to weather some of the volatility, are they volatile as well, or do you find that they have more durability, more steadiness in this environment?
They're equities, right? So they come with volatility like equity markets. Infrastructure is without a doubt the lowest volatility and sector of those four that I mentioned. But they all have attributes that perform well when inflation is a little stickier. Also, because they've lagged a little bit in recent years, we think that they're better positioned, given their valuations, to perform better than cap-weighted equities over the next couple of years.
Interesting. Cryptocurrency, is that on your radar?
It's not for real assets, in part because there hasn't been a time horizon that we've been able to measure that really suggests it has good inflation-fighting tendencies, and it also is a very volatile sector itself.
All right, Jeff Palma, he's SVP and head of multi-asset solutions at NYSE listed Cohen and Steers. Jeff, thank you so much.
Thanks, Kristen.
Yep.